Joining us with analysis on that and so much more, Chris Verrone, Strategas Research Partners, and a technical and macro research. Good morning to you.
Great to be here.
Should we talk oil first, or should we talk other technical matters?
Let's talk oil. I think.
What do you think?
I think it's the most underappreciated story of the last 3 or 4 months. And
in what way?
You know, markets love paradox, right? And how about the paradox of 3% CPI prints back in July, and it's been energy's market ever since. I mean, energy's outperformed every other sector by at least 800 basis points since that July 12th 3% CPI print. I don't think people appreciate just how strong this sector is under the surface. There are more energy stocks above the 200-day than tech, than discretionary, than industrials. Any way you cut it, I think it's really reclaimed the flag of leadership here.
And is that something you think that persists, or do you think that comes down after 6 months, 8 months?
I mean, this move back to energy, I don't think is fleeting. I mean, this was the dominant leadership group for the past 2 years. It took the first 6 months of the year off. Right. I think it's reclaiming its role at the top of the leadership role. And, you know, when you think about it, whether it's up the cap scale or down the cap scale, small cap energy is the only small cap sector making new cycle highs right now. So whether you're looking small cap, big cap, Schlumberger, Halliburton, Baker Hughes, all new 52-week highs yesterday. It's hard to fight this here.
Doesn't portend good things for
the Fed. For the Fed or for everybody else.
Yeah. But maybe, is it saying that the economy's strong, or is it saying supply is limited?
Right.
I think there's a number of things here intellectually we could argue. It could
don't
be
do that.
Supply,
You'll lose us.
It could be demand. It could be China. Whatever it is, our work says people are not positioned for it. I think that's what's most important.
China should be helping.
Absolutely. And I think, you know, given how bearish the Chinese headlines have been over the last month, the fact that oil has continued to work in spite of that, I think is a very powerful message that maybe the energy markets are anticipating a turn in the Chinese data.
But so your argument is if everybody's offsides on this, meaning investors are not in these stocks, even if they're making, multi-year highs and all of this, that they're just going to keep going.
Yeah, I mean, I think if you look at the ETF flows in particular, flows into the XLE or the XOP are modest at best. They certainly don't reflect the type of enthusiasm we would expect, given how strong the sector has been.
Well, that just sounds like higher for longer for the Fed, because then the easy inflation work has already been done, and from here it's going to be much tougher to go.
Well, I think the move
8 to 4 is one thing. 4 to 2, we're never going to do it if oil is at $90.
And I think the move in energy and oil threatens to really blow up the disinflation narrative that's become so prevalent across the street.
So what does that mean for? So the S&P horrible 3 weeks, first 3 weeks of August. Then all of a sudden it almost has regained maybe 50% of the. So it's up like 2.5% from the lows. Not lows, but
it was down almost 5%.
Yeah, down 5, back 2.5. Is it back on track, or
Joe,
this doesn't sound good?
I still think we're in a corrective phase. You know what I thought was interesting last week? For a S&P that rallied back above the 50-day moving average, only 35% of stocks could say the same. So under the surface, this has been a market.
It's always been like that, hasn't this whole rally?
It's gotten much more pronounced over the last 6 weeks. Again, this is a market that's.
Is the oil story going to stick, though, if China's really slowing down? And what's the better scenario, that oil picks up or that China's not collapsing and putting pressure?
Well, it's such a good question, Becky, because I think our role as analysts is to decipher when the price action and the news don't jibe. And when you look at how bearish the news on China has been, the only thing I would ask, then why is iron ore not breaking down? Why is copper not breaking down? Why is crude as firm as it is? So I have to wonder, at some point, are the commodities actually anticipating the China news to get less bad or to turn? The fact that the metals have held up as well as they have, I actually think is a signal that something may be changing there, or at a minimum, we should be imaginative that it might change.